Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Tuesday, June 11th, 2013. Well, a continuation of the trend to the downside today, a candle that's made a lower high and a lower low. Previous day's trading we had a small bodied candle that found support around the 130.87 level, and the previous day's trading prior to that we also saw the market testing below there and being rejected from there. For today's trading the market did probe down below that 1380.7 level, but closed down below there. So it does suggest that there is potential for this market to trade lower. We have had a black body candle established today, and certainly not the same size as the black body for this day's trading, but it does suggest that the sellers have found some downside momentum once again. In net terms, they've made some net bearish progress, as opposed to a small amount that the buyers made for the previous day's trading. One worrying factor here is that the sellers failed to close with control of this market. In the previous day's trading, the buyers closed with control, and for today, the buyers have closed with control by closing the market just up above the midpoint level. Now, it's not very strong control, but what we want to see in a downtrend is the sellers closing with control, and here we saw it for this black body candle, and then the buyers actually took control of the market by the close of each trading day, and that doesn't give us a lot of confidence in this market trading lower. Now, the market interacted with this 13, or almost down towards this 1360 level, where we saw strong support coming in the recent past. So we've seen that price rejection here today with this long shadow, and that represents the sellers losing commitment. So another factor that doesn't give us a lot of confidence in this trend continuing down, and I suggest that if this trend does attempt to trade back down, we should see solid support coming in around the 1360 level, and then potentially we have even stronger support down around the 1329 level if the trend does continue down. A limiting factor here also to the upside is the 1380 level now, where the market may interact with, but also the zone extending up to around the 1400 round number should provide very solid resistance. We can see here in the recent past how the zone around there and just above, extending up to around this 1420 level, 1430 level, has acted as solid resistance for this market. Now, in terms of the Fibonacci extension, we're examining the relationship of this first time frame downtrend that the market's into the previous time the market's trending down. And here today we've seen the market interacting with the 38.2% level, and we've seen solid price rejection from there, with the sellers still failing to take control of this market. And it does suggest that there is potential for a change of trend to the upside. So we should be looking for a potential higher high and higher low. So the high of this current candle becomes very, very important, as does the low if the trend is going to continue down. In terms of the Fibonacci retracement here today, we've seen the market interacting with and just below the 61.8% level, being rejected from there. The sellers, as I've said, aren't showing any strength. It does suggest potential for a change of trend, so look for a higher high and a higher low. In terms of the pattern that was established that I discussed previously in the last week or so, we had seen this wedge type pattern develop, and we saw the prior downtrend to break out from below this rectangle pattern. Very solid first time frame downtrend, the market attempting to rally, peaks and troughs converging and getting narrower and narrower, so it is quite a large wedge pattern. We saw the close and the bearish close down below the bottom barrier, and it does give us a target down around the 1300 level. With wedges, and especially when they're continuation patterns, use the measured move, and that's the prior move into the trend, the extent of the trend, and projected down from the breakout area. And so it's this area here, there. That's a conservative view. I've taken the trend to continue at the break to be established at the breakout below the congestion area. Some may take it to be the top here. We have had a decent first time frame downtrend from around this area, but conservatively this gives us a target down around the 1300 level if the trend in this first and even the second time frame does continue down. The 1300 round number obviously should be a very, very solid area of support, being a round number, so we do need to consider that. But at the moment, the way that this market is selling off, especially over these last two candles with the sellers failing to take control, I don't have a lot of faith in the market reaching the target anytime soon, and what we're likely to see is the market to react and rally up to around these areas and then sell off once again. Now in terms of Ichimoku, obviously a bearish market in all three timeframes, so the market is still trading down below the cloud, and we saw some time ago the bearish breakout, the sell signal in terms of Ichimoku. The market was looking very overextended down around here, and the market moved back towards the equilibrium suggested by the cloud in that long-term time frame, and now we've seen the market trading close to the cloud. So the market has moved from equilibrium to disequilibrium back to equilibrium, and now we should be waiting for some sort of move. So it's a bit like a volatility cycle, and that's basically what it is, from low volatility to volatility, back to low volatility, to now what we're waiting for is volatility, and that volatility may establish itself as a trending move, so we do need to be aware of that. And the more likely move here would be to the downside, because the market is trading down below the cloud. As I've mentioned, strong barriers to that occurring, however, down below where the market's trading with this very solid support down below, extending down to the round number 1300. But with the market trading also down below the Kijun-sen and the Tenkan-sen, we have a bearish market in the medium and fast-term time frames as well as the long-term time frame. But looking to the Chikou span, that's below the corresponding price action, so it's confirming the negativity that we're seeing in the market. So I'd suggest that combined with the breakout down below the wedge pattern, completion of that pattern, and what we're seeing here with the lack of follow through, there's a possibility of the market potentially changing trend back to the upside, finding resistance in this area around the 1400 level, and coinciding just below there and just above with the Ichimoku indicators, and they will strengthen the resistance around there. The market then perhaps to sell off and to test down to around the 1300 level to test the target that was established by that wedge. But really this is all conjecture. We do need confirmation of that. Confirmation at the moment would be the market failing to close up above the 1380 level and failing to test above there, and continuing to sell off and seeing a bearish close down within this zone here below the 1380 level, testing down to 1360, and then seeing some follow through following that. But really what we need to do is wait to react to what we see in the market at the completion of trading for tomorrow.